So let's maybe start with the efficient market and what that really means for investors.
What it basically means is that information gets reflected in prices reasonably quickly. If there's a new cure for cancer that comes up and a pharmaceutical company gets approval, and that looks like it should make the market value of that company 50% more than its current market value. Because there are a lot of people around looking for that sort of thing, it will reflect that information very quickly without delay. And that's the general idea. It doesn't mean necessarily that market prices are always right, because, we never know. This new cure, will it have side effects? Will in fact the sales be the kind of sales that were projected? So, maybe the stock overreacts, maybe it underreacts. We never know. Prices are never exactly right. But the market does a reasonable job of getting that information reflected without biases one way or another. Now, it doesn't mean, though, that it's always right. In fact, I've often said prices are not necessarily always right. In fact, they're always wrong. And sometimes the markets go absolutely crazy, as they did in 1999 and early 2000, when Amazon and Microsoft sold at well over 100 times earnings. And even those wonderful companies lost 90% of their value when the dot-com, as it was called, bubble ended. But nobody is able to predict this in advance. And this is, I think, what, a lot of people say, oh, gee, it was so obvious that we were in a dot-com bubble. Well, what people don't remember is the person who coined the expression irrational exuberance was Alan Greenspan. And he coined that expression not in March of 2000 at the peak of the bubble, but in 1996. And if you, in fact, bought in 1996, you actually did very well. So I'm not saying that bubbles don't exist. And on the meme stock thing, I had mentioned GameStop and how crazy it was that it doubled. It was making no money. It doubled and then doubled again. Well, everyone knew it was crazy. Yeah. Well, Melvin Capital, a hedge fund, went in and shorted the stock and shorted it to such an extent that when it doubled again, they went bankrupt. So sure, the market gets it wrong from time to time, but there is nobody, and I mean this, nobody who can consistently do better than the market. And the market usually gets it fairly right and is awfully hard to beat. And I think the lesson is it's awfully hard to beat. Have the core indexed, and also don't you dare try to time the market because you got to be right twice. You got to be right when you get out. You got to be right when you get back in. You'll never do that